In the last week, the rupee exchange rate was volatile and hovered in the range between 74.35 to 76.2350. The rise in the rupee by 2.47% was well supported by a fall of 4.54% in the dollar index from the high of 102.99 on 23rd March to the lower closing of 98.31 on Friday last week. The rupee's up move was also supported by a whopping gain of 16.29% in the BSE Sensex in the period between 24th March to 27th March 2020. Reserve Bank of India, in their well-planned move, cut the repo rate by 75 basis points to 4.40% and broadened the LAF corridor by 40 basis points. The measures announced by RBI will result in total liquidity injection of rupees 3.74 lakh crore to the system. RBI also permitted the corporates and other entities to provide a moratorium of 3 months on rupee term loan installment payments and allowed to defer interest on working capital facilities by 3 months. This will give some room to the corporates to plan their cash flows, which had been affected by the 21 days lockdown from 26th March 2020. The lifting of the lockdown depends upon the situation of the epidemic prevailing in the second week of April 2020. The IMF has downgraded the outlook on global economic growth by more than 1% in 2020. Many of the analysts are forecasting a decline of 2 to 3% in the GDP growth in 2020 in large Asian economies like China and India. With the toll of deaths and virus spread multiplying at this point of time, specifically centered in US and Europe, any optimism on the recovery in global financial markets is premature, and in our ultimate a time frame of 25 to 40 days from now is very crucial, and the rapidly changing trend in the global financial markets in the above period shall be the hard reality to face. The coronavirus is now spreading across the countries in the globe, and till such time the outbreak of the spread gradually recedes, the volatility in the global markets is bound to continue, perhaps more severely than seen in the recent past. RBI, in their second tranche of sell-buy dollar swap auctions in the market on 23rd March 2020, accepted the bids from banks for USD 600 million against the notified amount of USD 2 billion. The 6-month forward dollar premium has moderately eased to end the week at 4.90% per annum from the high of 5.25% seen in the early part of last week.